Okay, good evening, everyone. Welcome to another episode of Sequoia Lending. If this is the first time on our platform, or if you have been, um, okay, hold on a second. Okay, so if you this is the first time that you're on our platform, Sequoia is actually a business solution platform. We are not just lending, uh, we're not just providing commercial lending anymore. We're actually providing business solutions for various different type of business owners. So of course, the lending is still one of our major service, but on top of it, we also provide business funding now, which means that hey, we can provide working capitals, equipment loans, so on and so forth. And are you guys able to hear me? Somebody saying that they cannot hear me.
I hear you perfectly.
You hear me
I hear
perfectly?
you
Okay.
fine.
Okay, got it. Okay,
Not
great.
well.
How about this? Is that okay now? Is it better?
You're
I
sounding
can hear you
clear to
fine.
me. It's no problem.
You're good.
Okay. All right. Okay, good. So move forward. So we are not only just providing commercial lending for commercial properties, but we also provide fundings for businesses such as working capitals, equipment loans, so on and so forth. And on top of it, we also add another vertical onto our platform where we provide business solutions or business service such as cost aggregations that we can help our business owner who owns commercial properties to reduce their property tax. We can also provide wellness program where we can provide free benefits for business owners who has minimum 3 full-time employees. So again, that is what our platform is. Our goal is to open up, disrupt the commercial lending industry, to have as many people to experience about this platform as possible, to benefit from it. So every Wednesday night, we have a training like this to share with everybody what the market looks like, what's going on out there, what kind of product is we were talking about. So recently, the biggest news today, the biggest news recently is definitely is the rate dropped. The Fed actually dropped the rate by a half point about a week ago. So the prime rate now, remember everybody, a lot of people is asking you what is the rate right now. So again, the prime rate right now is at 8%. Okay, 8%, and many other rate such as 1 to 4 unit investment property of multifamily. That type of product does not follow prime rate, but they follow something called 5 year treasury or 10 year treasury. So those rates are at three. I think it's about a 3.5%, somewhere around there. So if today in today's market, if you're quoting somebody 1 to 4 unit investment property, we can quote somewhere between 5.5% to 6.5%. It's getting lower. I mean, we haven't seen that kind of rate for a long time, at least 2 or 3 years, especially during COVID. So again, it's a great thing for us. It's good time for us to be in commercial lending, especially for non-QM lending. So go out there, talk to your realtors, talk to your loan officers. A lot of the things that they cannot do, we can definitely do it right here in our shop. So every Wednesday night, we invite some of our preferred lender or our advisor onto our platforms to share about what they can do, what their product is, so on and so forth. So today we have the pleasure to introduce Mr. Richard Lee. And Mr. Lee, Richard, it's first of all, he's also a Sequoia member. He actually joined Sequoia a long time ago, but at that time he was working with another bank, and he heard about Sequoia platform. He looked at us, he vetted us, he checked us out, he liked our platform, he joined our platform. But besides of being a Sequoia member, he's also the VP for a VP of relationship manager for Preferred Bank. So he is a VP for a bank, and his bank is a little bit different than many other banks that we used to. So he's going to be here to share with you what his bank can do. But what the good news is that he's one of us. Okay, he's a Sequoia advisor. A lot of the deals that normally, when you submit a deal into our platform, he is one of the persons that we go to all the time to talk about different type of deals, whether it's an investment property deal or working capital, or anything in between. So they are sure can do a lot of things. I mean, I was surprised that they are able to close a $1.5 million deal for us. It's a probably he's going to share with you. It's one of the clients that convert a building into a student housing. Nobody would like to touch that deal, but his bank is able to fund it for the client, 1.5 million, and he also funded another working capital deal for a bakery for about 350,000 dollars, I believe. And also he's working on an $18 million deal for one of our client who just I think the client is building um, a student housing also in the Bay Area. So again, their shop can do a lot of very creative ways to get our client funded. And the good thing is that I have his direct number, and anytime that we need him, we call him up, and he's able to help us to solve a lot of problem. And that is the power of what Sequoia platform is all about, and that is the value of joining the Sequoia platform. So without further ado, Richard, the floor is yours. Unfortunately, your camera is not on. We cannot see your beautiful face, but again, the floor is yours, Richard.
Yeah, thank you for the introduction. And definitely, we're the preferred bank for Sequoia, Sequoia Lending. And first of all, I'd like to really thank everyone for your time. Good evening. And I know this is kind of late. Over here, I'm on the West Coast, it's at 5, but I know you guys are all over the US and you could be anywhere from 6 to, I believe, 8 o'clock. So thank you for your time. First of all, I've been working with Alan for quite a while. I actually was with him when he was with Wise, and then move over with him at Sequoia because I vetted everything that he does, and I believe his platform does really well and it helps a lot of people. So a little bit about background about myself. I've been in commercial lending since 2006. I've done various roles from being running a branch, running a region, to being a relationship manager and portfolio manager. So I've got quite a lot of experience in terms of selling and getting deals close. So I look forward to really working with everyone here. And obviously, Alan's got a direct bat line right to me at any time of the day. He even texts me at like 6 in the morning, my time. So he has full access to me. So anytime you need any information, he'll text me any time of the day, even on the weekend. So I cut off replying to him at 9 o'clock my time, which is midnight at his. So you should be able to get a pretty quick answer from me. So let me talk a little bit about Preferred Bank. So do you guys see the slide?
Yes.
Okay, so Preferred Bank actually it's a publicly traded company on NASDAQ. Our symbol is PFBC, and we're one of the larger independent commercial bank headquartered in California. So if you notice that there's a lot of independent banks that has very low in total assets, so which means that they're going to have certain lending limits for clients. So they may not entertain your larger loans. Now, with Preferred Bank, we're currently at 6 billion and growing. So the higher the lending, the higher the total asset that we have, the higher the lending limits that we could have. I was with one bank previously that had a very low total asset, which means that my lending limit for any one single lender borrower, it's up to 5 million. So as you know, right now, real estate prices are going through the roof. So at 5 million cap, I'm not going to be able to do a lot of lending. So with Preferred Bank with $6 billion in total asset, we could go up to 22 million plus. So depending on how fast we grow, that is going to increase in time. But since 1991, we have serviced the financial needs of valued customers and communities. We would like to have a relationship with our borrowers. We don't want to be a transactional bank. And currently, we're headquarters in downtown Los Angeles. We have location in Southern and Northern California, New York, and also Houston, Texas, which means that we could lend in those particular areas in terms of regular lending. And I'll go into that a little bit more down the line in the next slide. We've been ranked quite high in a lot of banking when they do surveys and ranking based on assets, industry, how our service is. And also, we were in 2019, we were ranked one of the best performing community banks in California. And our asset size, it's about, it in 2020 was noted by S&P Global Market Intelligence. We were ranked number 5 in asset group in 2023 and number 10 in the top 25 U.S. bank in our size in the United States. Now, this is the slide that I guess everybody wants to see. What we offer. Now, we offer real estate loans in terms of purchases, refis. We do secure line of credit, construction loans, perm loans, repossession loans, bridge loans, and also SBA. Now, what we really like to do is constructions and bridge loans. A lot of banks, they want to focus more on the fixed rate. We like to do the adjustables. We like to do the short-term loans. That doesn't mean that we won't do the long-term fixed rate loans, but it may not be as desirable as what Alan is saying, but we target more of the specialty, like hotels, and some of the non-traditional lending. If you notice that a lot of big lenders are not doing construction loans, they're not doing a lot of bridge loans. Those are literally our niche programs. We love those. I was working on a commercial loan that was about 22 million to build a project in Oakland. But we're still working out the kinks of that project. But so in terms of the loans that we did for Alan that Alan was mentioning, the one student housing one, for the 1.5 million, it was originally an office building where the borrower converted the office into student housing. So what basically we would classify that as SRO, and I'm not sure how familiar you are with SRO. They're called single resident occupancy. They're kind of like hotels. They have their own room, and what they do is they share common areas. Currently, it's like the in thing for a lot of the bigger cities because of the affordable housing. So this one, it happens to be within 2 blocks of a state university. So the borrower did a great job in converting it. We saw the building and it was really nice. And it was close to being fully stabilized. And we funded it at 1.5 million. The specialty that we were talking about also is the bakery that Alan was talking about. Originally, they were asking for 250, but we worked out the numbers and we boosted it up to 350. And it was a build out bakery in an empty retail space. The borrower paid 500,000, purchased it cash, and then after all of their improvements and renovations, the property was actually worth 1.2 million, and we funded it at 350. So, which kind of helped him out a little bit. Now, if you look at the last point, that what we do is SBA lending. Remember how I mentioned that we could service the California, we could service part of New York and also Houston, Texas. With SBA 7A, is a nationwide program. We could fund anywhere in the United States, and that could fund. What we'll do is we'll do restaurant purchases, hotel purchases, any type that has to do with SBA, we could do. 504s, it's probably a little bit more towards California because that's our lending territory, but 7As we could do pretty much nationwide. Property type, multifamily, single family constructions, and also remodeling warehouses and all of those. Now, one thing that I think you're going to be running into a lot of problem is MRB, marijuana related business tenants. We will fund those. So as long as the borrower does not have any ties to the business and all they're doing is they're leasing it out, we can fund those. Okay. Loan size, there really is no minimum loan size. I put 250 there. Reason being is that if we put it too low, sometimes the cost just doesn't make sense. So you just got to make sure that it's cost effective for your borrower. But like for example, for an SBA for 100,000, you're probably looking at almost 30 to $40,000 in fees. Does that make sense for the borrower? Maybe not. So I would seriously talk to the borrower first before you go and look for an amount that's lower. And also, the higher the loan amount, I guess the better the commission for you guys too. So, and we'll fund anything up to 20 plus million. Like I said, I'm working on a deal right now with Alan that's 18 mil. I'm working on another one that's about 22. There are others that I'm looking at that's about 25, 26. So our sweet spot is probably maximum, it's probably 25, 26. That's pretty much all I have. And I was just thinking is more, if you have questions, it'll be better for me just to answer them for you. I could open up for questions right now. Do you have anything that you want to know in terms of what we look for, how we process, and what documents I need? Fire away. Answer any questions you have.
Yeah, I saw there's a hand raised. Ivan, I saw your hand. Please unmute yourself and ask your question. Ivan, or anyone else. So let me. Okay, go ahead, Ivan.
I was wondering if you do I have a company that's interesting in a landscaper who's buying property and buildings. You do
Okay. First of all, Erwin, where are you?
New Jersey.
You're in New Jersey. Are they buying it for their own use or are they
Yes.
buying it for investment?
No, they're buying it for their own use. He's moving to a larger. His business is very good. He's moving to a larger headquarters.
Okay. Do you know what their down payment is going to be like?
Whatever I tell him to do.
Wow, I love those clients. Yeah, so Jersey, I know that the SBA could do it. That's a fact. So SBA, you could go up to at least as low as 10% down.
Okay.
So yeah, I would seriously consider talking to them and see what is their down payment, what do they look like, and if you could provide the financials to Alan, we could definitely figure out how much they could get it for.
I've been waiting for the financials for almost 2 weeks. I should have them now. He just finished last year's tax return about 2 weeks ago.
Perfect. So okay, so this is a perfect leadway into what I need, or actually, I'm sure that every lender is going to need these documents. So the best thing to do is have 3 years tax return, right?
Yep.
3 consecutive years, personal and business. And if they're sole proprietors, I mean, obviously it's going to be on their Schedule C, right?
Yep.
So if they're purchasing, 2 months bank statement to show they have the funds available. Okay.
Okay.
Now, one condition for SBA is that the money cannot be borrowed from anywhere. It cannot be. I mean, I've seen situation where clients are refinancing their homes to take out money as a down payment. Unless you've got that money sitting in your bank for at least 90 days, so 120 days, I would not submit that application yet.
Okay.
Okay.
Yep.
And year to date profit and loss,
Right.
balance sheet. Okay.
That's what it is for. Yep.
Yeah. And if you have all of those, submit them to Alan, and then we can look through it from there.
Okay.
So
Okay.
just to jump in right here, Aaron, that when you sign up as a Sequoia consultant, you do have your own website and you can submit whatever clients that you need to submit through the product page. It's
Right.
called a scenario form.
Yep. Got
Okay,
it.
great. And then also just wanted you to know, hey, even though Richard is a very good friend of mine, we do a lot of business together, but the reality is that there are deals that Richard cannot do. But it's okay. That is why Sequoia is here. So even though Richard might not be able to do some of the deals, but we do have lenders that can do deals.
Okay.
So whatever you just share, absolutely we can get it done. There's no doubt. Okay.
Yes. Yes.
And I see a hand raised by Isa. Isa, go ahead. Haven't seen. Yep,
Hey
Isa.
everyone, Isa here in Baltimore area, and this is my question is my personal situation. So we open adult daycare. We're operating over a year ago only. We got our license almost 2 years now, and I have SBA loan and I want to refinance it.
What do you have right now in terms of SBA? What rate? How much? And when and the loan
It's
to value?
200,000. It's 200,000 SBA loan, and I don't remember the rate. It probably that's why I want to refinance is probably around 11.
Okay, so wow, Prime plus
Yes.
3?
Yes.
Okay. This is definitely a good time to refinance. Yeah, I would talk to Alan.
Okay.
Yeah, I would definitely
But the
talk to Alan
property,
and
we
see.
only renting the property, but the rest is ours.
You're renting the property?
Yes, the business is ours. I have a partner.
Ah, okay. So it's working capital.
Yes, it was a working capital. Yes.
Okay.
When we do the SBA loan.
Okay, I think it might be a little tough to refinance at this moment because of the working capital. If you were purchasing, then I would look to purchase something and then roll the loan into it.
You mean purchase the building?
Yeah, purchase something that would fit your business into it. Because if you're renting, it's going to be tough for you to refinance it, especially when it's capital. Because capital usually so here's it.
Well,
Here's
they attach two of my properties.
understood. So that's what it's still hard to refinance a working capital loan. It might be
Gotcha.
easier for you just to see if you could find a property that you
Okay.
could literally, instead of paying for rent, you're paying for your own business.
Got
Right?
you. That
Right?
makes sense. Yes. Yes, I understand. Well, thank you so much. Now I
Oh,
understand.
you're welcome. You're welcome.
Thank you. Thank you, Alan.
Sure, absolutely. Let me jump in a little bit right here. One thing that we do our best is to provide different solutions for our clients. So what ISA is asking is to try to refinance the SBA loan. However, SBA loan is still pretty high right now because SBA loan goes with the prime rate. The prime rate is at 8% right now. So normally the bank is going to add anywhere between 1 point to 3 points on top of the prime rate. So you are talking about somewhere around 9% to 11%. Now, however, the 1 to 4 unit single family investment property rate has dropped significantly. In today's market, we are quoting anywhere between 5.5% to 6.5%, somewhere around there. So it's an other option if it works. Okay. So if you have other investment properties and instead of refinancing the SBA loan, it might be worth it for you to look into it where you cash out from your investment property and use that to pay off your SBA loan because it will be much, much cheaper for you. So again, there will be another option also. Okay.
Yes, you're right. You're right.
And also on our platform, we have another product called retirement account rollover, meaning that if you have products such as 401k, IRA, annuity, those are retirement accounts. Now, those are your money. If you are willing to, we can help you to roll over those money legally into working capital for your business. Now, that's not a loan. It's not a loan. It is your own money, but you just have to do it in the right way. You have to do it legally. So that's an other option also for our business owners. So that is what we
Mm.
provide as on our platform, is to provide various different type of solutions for our client. Okay.
Can you go deeper on that, Alan? So the rollover is, do they?
Let me do this, because tonight is Richard's night. Okay, I don't want
Got you.
to take
Got
over
you.
his
Got you. Got you.
spotlight.
I'll
So I
connect with you.
Yep, you connect with me. I can share with you exactly how that work. All right.
Thank you.
So let me ask the question, Richard. So to you, what would be your ideal client?
Wow, that's a great question. Um, I mean, if anybody's gonna answer this one, okay, it would be someone that could provide a property with high debt coverage ratio, low LTV, high liquid client. I mean, obviously that's kind of like a Disneyland type of client, which it's not going to be possible. But I would think that if you have someone that is, we would like to see them not be fully leveraged, because when we see clients that are fully leveraged, the chance of them losing something is very high.
Right.
So you want to look at somebody that's a little bit safer. I would say, if someone that has a 50% loan to value on their property, that's pretty safe, right? So I'll give you an example. Had a client that the family owns a lot of hotels. And before COVID, they were doing really, really well. Mainly, interest rate was down, you're in the threes. Their hotels weren't leveraged. They were probably 30% loan to value. And then COVID hit. And also at the same time, he got greedy because the money is so cheap. He was borrowing money all over the place, using his properties as collateral, and started buying into things that he has no experience in. So what had finally happened, as you know, after COVID hit, interest rate went up, and with most of his property fully leveraged and the interest rate being high, the debt coverage ratio went bonkers, and he cannot cover. And he eventually, one by one, up to today, he's starting to lose his properties.
Yep.
Right. So even though that, yes, we're here to do loans and to make money, but we're also here not to mess with customers' livelihood. So you don't want to push those clients into further deepening into their hole, digging into their bigger holes. And so what I would do is, I would say stay away from those clients, because your reputation is just going to be on the line. So I would say look for clients that are probably 50 and below loan to value. If you have clients that are 50 and below in loan to value, usually their debt coverage will be fine. Okay, because right now even though the rate it's going down, we still have to do stress tests based on the highest rate possible. So I would say, yeah, look for clients that are 50 and below, if you could have those, and not people that are just, oh, I have a 30% loan to value, I'm going to try to push it up to 70. And those are people that's going to get in trouble somewhere down the line.
Right.
Okay.
So again, what Richard is talking about is that he's looking for what we call a paper client. Am I correct saying that, Richard? A paper client means not necessarily.
I mean, yeah, you could say that, but it's not, a paper, there's going to be situation where they're going to be a little bit over, but there's other compensating factors, like they may have money put aside for rainy day. So it doesn't have to be A. It could be A minus,
B plus.
right? So,
Right.
I mean, everybody is looking for A.
Right.
Everybody's looking for that A paper. but there are some times that you're not going to run into a paper, but you just have to make sure they have other compensating factors. You're
Right.
going to have clients that's going to have pros and cons. And if the pros outweighs the cons, that deal is going to make sense. But
Yeah.
you have cons that's going to outweigh the pros, then you know that those are the people that you kind of have to stay away from,
Yeah. So
if that
that's
makes sense.
yeah, so that's the reason that we love to work with Richard is because they are very flexible, unlike so many other banks that they're actually literally looking for a paper. For example, if you go into big banks such as Bank of America, Wells Fargo, Chase, you name it, and if you're not in the A plus plus range, they don't even want to deal with you. Not even mention about A minus and B plus, that kind of client. But with Rich's firm, they are able to push the envelope, and they are already closing many deals for us already. Um, and again, that is the we do need lenders like this to back us up. We do have another question right here from Benny. He's asking what is the minimum credit score for you to consider.
I would say probably 680, 690 in that range. Okay.
Okay.
Because if anyone below 680, right now, I mean, it's easy to get 680, right? So I would say it's for anyone that's an experienced borrower, they are probably going to be above 700, but I would say
Right.
minimum 680. Anyone below that, you're going to have you need to know why they're below that. So, that which leads to the next thing I wanted to say is that I want to give you an idea what our processing process is here at Preferred Bank. So, if for any reason you have the LOI or Alan would sometimes call it the term sheet in your hand from us, you're 90% approved for that loan because we do 100% of our homework ahead of time. So you may I don't know. Well, I think Alan, we could ask Alan this question. Past we've done a couple of deals that were approved. The two that we funded, there was a lot of questions that we asked before I issued the LOI or the term sheet,
Yep.
and it seems like it's a pain
Yep.
because there's a lot of back and forth, and it seems like we're not, we don't have our act together. But the point and the reason why we're doing all of this is because once we have all the information that we need, we submit it up to our credit admin to get an approval. We submit what we call a deal sheet. And
Yep.
once a deal sheet goes to our credit admin and our credit admin signs off, your loan is approved subject to the appraisal. Now, the only time that the loan won't get approved after the deal sheet or the term sheet, it's because the appraisal didn't come in.
Right.
Okay. So everything that we do is always upfront. It's not going to be at the back end. What I would not do to you is that once we get your clients to spend the money and then we tell you the loan is not approved.
Right.
Because that's the most discouraging thing ever. Coming from an independent contractor, which I was before, and also working for the bank, because it's hard to have that conversation with the borrower. Hey, you spend sometimes $10,000 on an appraisal on a larger property, and then you do a phase one and everything is in, and then all of a sudden we won't do the loan.
Yep.
So once the appraisal comes back, ask Alan on the 1.5. We did so much back and forth in the beginning. And then once that appraisal came in, the loan docs were out within 2 days.
Yep.
So signed and done.
Yep.
Okay. So please bear with us. If you have a deal going through Alan and coming to me, and I'm asking for documents and asking for question, please don't think I'm a pain in the butt. It's just that I'm trying to get your loan through so we could get it approved up front. And then when the appraisal, and then once that LOI goes out and your borrower is okay with it and they sign, that's a deal that's going to make you money.
Right. That
Okay.
that is very, very true. So again, let me add on to that's why we build a Sequoia platform is because many of us on this room right here, you might come from a traditional mortgage company or some other industry that you don't understand. You've never been through the commercial lending side of it. Every single deal in the commercial side of it, it's basically it's an art to put the deal together. Many of you is asking me, hey, Alan, what is the interest rate? How, what is the status? When it's going to come out? When can we close? We all want to get to the finish line as soon as possible, but the reality is that it takes time for the lenders to go through all these underwriting and all these evaluation of the project. So the good thing that it is true that the good thing that we work with Richard and his team is that first of all, we know each other very well. I can buck on him every single day. It's just like I said, I text him 6 o'clock in the morning. But unfortunately, I cannot do that, or we cannot do that in the back office to every single lender out there. Even though many of them we do have good relationship with, but not in that level. So when we ask you to provide some documentation, honestly, quite frankly, it's not that we want it. Richard doesn't want it, but his committee need to see it. His board needs to see it in order for these loans to go through. So the good thing working with him is that yes, upfront, even though there's a lot of back and forth, but again, it's not unnecessary. He's putting in his entire team, not just himself, to work together with the client. So that helped us out tremendously where you and I, even myself, don't even need to be involved because once I send the deals to Richard, and once we set up that relationship and the client signed that broker's agreement with us, pretty much we are hands off. And Richard and his team is going to come in, including his processors, his managers, his boss, and everybody's involved to get through this loan. Whether it's a $300,000 loan or a $1.5 million loan or $18 million loan, it does not matter. His entire team is actually working on it. So again, in this room right now, there are a few of us. I see Matthew right here. Matthew, your guy, the tire guy, that deal is with Richard right now. Okay, Holly, I know that you're in Texas. Holly, your deal, the $4 million deal, your clients that buy in the bank is with Richard right now. So again, we will update you along the way, and feel free to ask us, what the status would be. Again, we will, but trust me, once the deal is in Richard's hand, we are in good hand. If we cannot get it done, he will let us know very, very quickly. But one thing that I know is that he and his team is willing to go that extra 10 miles, not even extra miles, to get the deal done. Okay. Um, Alicia is asking how long does it take for the letter of intent to take to be issued? Again, there's no one size fits all. I cannot tell you is that 5 days, 10 days, 20 days, 30 days, really depending on how complicated the deal is. Richard, I mean, again, it's your neck of the woods. So why don't you share with us how you come up with that LOI and what do we have to go through?
Okay. So let me see. I think the quickest LOI that we sent out was the bakery,
Yes.
right?
Yes.
Okay. The reason it was
About
so
2 days.
quick, yeah, the reason it was so quick was because we had all the financial.
Yep.
So which I just previously gave a list is 3 years tax returns for business and personal. So and also year-to-date P&L statements. If you could get all of those in, we review it right away. And then if we feel that, so the my team will review it first, and if they think it's a doable deal, then we'll prepare the deal sheet and submit it to loan committee. So that deal was because we had everything, and I did within the day that I got the information from Alan, I immediately went to do the site visit. So I knew the background of the deal, and then I did the research on the bakery. So yeah, day or two is really pushing it. But I would say if you have all the financials, I would say 3 to 5 days is probably the day that we could get it. Now, the bigger deal is a little bit more complicated. The 18 million, we still have not issued a LOI.
Yep.
Because there's still a lot of question that wasn't answered. But just to tell you, we've been working on this, and we've already been to the site 3 times.
Yep.
and 2 times with the client, and 1 time to do the site visit, which is the first day that Alan gave me the information.
Yeah.
So as soon as I get the information from Alan, I'm on top of it. So I will review it and I will immediately tell Alan what I need. The tire guy, whose deal is that?
That is Matthew. Matthew, are you online?
Okay. So I'm working on the tire guy right now. So majority of the information is there. What I'm missing is one of the tax returns. So I need that. I've already submitted it, but I know that they're going to ask me for that one extra tax return. The reason I needed that tax return is because the borrower only showed me the Schedule C,
Mhm.
and that's it for that year. I think it's 2022.
Yep.
So if you could get me the full tax return, that'd be great.
Yep.
Okay.
Wonderful. And I saw Daniel. Daniel, your hand is up.
Yeah, okay. Yeah, Alan, this question is also for Alan and Richard. I was ready to turn in an application right after this session. One of my customer I encountered is like this situation. She was gonna sell her residential property, but the realtor didn't sell it within her time frame. Now she changed her mind, and she wanted to turn into a rental property. She already has a existing rental property, and now she was gonna turn this into a second rental property. Now she want to refinance. She has no mortgage on this, and the value of the house is about $380,000. She was asking if she can get a $220,000 loan from us.
I will.
Richard, that's
I
not for
would
you,
say.
right?
I
that
would
for you?
say let's just. I think this is something that Alan and I would talk offline on, because you're converting a single family residence into a
Rental property.
into a rental property, right?
Right.
So this is probably something that you may not want to. Yeah, let me talk to Alan offline. I think there's another way of doing this loan rather than go through commercial.
Yes.
Okay. Yeah.
Yes. The answer to you is yes. This is a very, very easy deal. It's
Yes.
what we call a 1 to 4 unit investment property. So
Yeah.
go to your website, submit the investment property, 1 to 4 unit investment property scenario.
Okay.
Give us all the numbers. And for something like this, I can tell you if the credit score is above 700,
She has a 750.
750,
Yeah.
no problem.
You're not gonna have a problem. I think Alan it would be a better source for
The
it than me.
maximum cash out for you is 75% cash out.
Okay.
Interest rate, I would say somewhere around 6 to 6.25. 30-year fix, 5-year prepayment penalty. The lender is going to charge 1.5. We charge 1.5, so total 3 points. So again, this is a done deal.
Okay, that's great.
Yeah.
I'm gonna turn after this.
Yes,
Yeah.
yes, sir.
Yeah,
Okay,
that's something that Alan would be better at.
Yep. So Richard is a commercial guy. So he's more dealing with commercial properties such as bakeries, warehouses, hotels, things like this. Daniel, I see your hand is up. Daniel.
Yes. No, I already done. Another maybe.
Oh, there's another Daniel.
No, Daniel. I'm talking about Daniel. Daniel Liang, Mr. Liang.
Hi. Hi. Good evening, everyone. This is Daniel in California. I'm in San Francisco Bay Area. A quick question. So, I heard that Richard say it takes a long time for us to pre-approve a loan or get an LOI because we don't just write a letter, but you guys really look at the documents. It's like I'm afraid that like let's say there are like so many potential client out there. What if they just shop around? We spend a lot of time collecting the document. Of course, you and your team spend a lot of time to reading those documents. My question is there a way or legally that we can charge a small fee from the client? Of course, we are not in the business of collecting those $100, $200, but I just want to make them feel like it's a serious business.
That is not Richard's question. He doesn't care. Okay, that's the fees between us. That's the fee between us and the lender. So what Daniel's asking for is that can we charge an application fee or processing fee upfront? The answer is yes, but most likely we won't do it. unless we know that the client is really shopping around and we need to spend a lot of time on it. But most of the time, we are willing to put in the work for the client and provide the term sheet for them. Now, however, if we really know that this client, for example, we have clients that came to us, we issue a term sheet and they disappeared. And a month or two later, they came back to us with the same exact deal. And at that time, probably we're going to charge a fee also. But upfront, most likely we won't do it.
Okay, I see. Yeah, of course, it will be case by case, depending on the client. I see if I feel like
Right.
they're not that serious, but sending me tons of document. Because for me, I need to go physical. Some client, like some business owner, they don't really good at computer, for example. Like, but I need to in person. I need to personally go there to get the document and scan it. So yeah, what is a good amount for the application fee? Like maybe $100 or $200, things like that.
Well,
And
again, sounds like this is not even an application fee, right? So this is something that you're working for your client. So again, that is from a company standpoint, from Sequoia point of view, if we do charge, we normally charge something like $4.99.
I see. Yeah, we can. I can charge that amount also because I just feel like I don't want to send in 10 application, but eventually only one turns out into a deal. What if those 9? Yeah,
Totally understand. Totally
yeah.
understand. I mean, we can talk about that offline because again, it is a double-edged sword. So we just need to use it wisely, put it this way.
I see. Okay.
So here's my opinion on it. As Alan was saying, is a double-edged sword, right? So I've been on the independent contractor side, and I've also been in the bank side. So obviously, working for the bank side, I get paid for whatever I do. It doesn't matter. So I get paid and reimbursed anyways. As an independent contractor, it's it's a waste of time for us. Understood. But here's the thing: is that when you start charging those fees, some clients may feel like that it's more transactional.
Yep.
And that's the other side of the sword that you may feel. So I don't know. I don't know. I don't want to give you advice on whether to charge her or not, but I myself have gone through a lot of those where I went to meet clients, helped them with the application, gave them an LOI. They took my LOI and shopped around and got a better rate. I've had those, but then again, those are the clients that you will never call back, right?
Yep.
If they call you back, hey, then as Alan was saying, I'm going to charge more now because now I've got the upper hand, right? So that's how I feel about that.
Okay, great. There's another question right here. Cindy is asking a very good question right here. She's asking, what is the rate for warehouses, industrial loans, so on and so forth? So this is my suggestion to every single one of us. Somebody will ask you, what is the rate? What is your rate? What is the rate today? So on and so forth. The answer to this is this. The rate, first of all, let me tell you why we cannot tell you the rate. In commercial lending, it's just like, imagine that you walk into a doctor's office. You go to the office saying that, hey, doctor, what is your best medicine? What do you think a doctor will tell you? The doctor is going to tell you, hey, let me do some checkup on you first. Let me see, tell me what is wrong with you. Tell me, what's going on. So the doctor has to ask a lot of questions before he even know if he can give you any medicines. Same thing with commercial lending. And that is why we call ourselves loan consultant. Why? Is because when somebody asks you, hey, Alan, what is your rate? I don't even know what you're talking about. So Cindy, you're asking, what is the rate for warehouse? So now, these are the things that I would like to ask you, right? So number one, what is the loan amount? Are you talking about $100,000 warehouse? Are you talking about $1 million warehouse? Are you talking about $10 million warehouse? I don't know. You need to tell me what the loan amount is. Number two, what is the use of this warehouse? Is it personal use or owner occupied? Or is it 100% investment? Or is it 50% owner occupied, 50% investment? What is the combination? What is the use for that warehouse? I don't know. Now, let's say somebody's saying that, okay, fine, I'm going to be 100% usage. Then I will know what is the rent roll. What is that property generate? I need to calculate a DSCR. And if somebody's saying that I'm using it myself, then I will ask, what kind of business are you in? If somebody's saying, hey, I'm in a cannabis business and I need to buy a warehouse, the rate is totally different if I were just a regular e-commerce that use the warehouse. So again, I need to know what is the usage of that warehouse. So we ask questions before we can come up with what that rate and term is. And even though I ask for all those questions, the rate and term is the last thing that we provide to the lender. I mean, provide to the client. We have to, just like we just said, we have to submit to the lender. The lender has to go through all these evaluation first before they can come up with what that rate is. Now, keep in mind, how is the rate finally determined? I believe, Richard, correct me if I'm wrong. I believe it based on one word. It's called risk. How risky is this project? The higher the risk, the higher the rate. The lower the risk, the lower the rate. Am I correct saying that, Richard? Anything that you want to add?
You're absolutely correct. So another analogy that I like to throw in would be like life insurance, right? So if you do life insurance right now, an 18-year-old walk in and say, hey, I want $1 million life insurance. I have no risk, no nothing, no illness, and I'm 18. That policy is going to be much lower than a 50-year-old going in, hey, I want $1 million life policy. Why? Because the 50-year-old person, it's closer to the other end than an 18. And if they're sick or anything, that could cause that risk factor to be higher, which will cause the premium to be higher. The way we price loans, it's exactly the same way. So given an example, I'm working on a loan right now where it's very similar to the one that Alan has in that we just closed for 1.5. It is a multifamily, same way. They also have a retail store, but I would offer them the same program as I would with the one that I funded with Alan. But the problem is that retail store is a cannabis. So obviously the risk is involved. So we have to charge them more because of the risk factor.
Yep.
So Alan is absolutely correct. He's right on point in regards to how the pricing is. So one pricing could be a person coming in with, oh, I've got several $1 million in the bank. My loan to value is 50%. No, it's 40%. I've got, my whole property is full with leases for the next 10 years. That's going to be an ideal loan for anybody. That's a A++ paper. So any bank that has that, they're going to quote you the best rate that possible. Whereas if somebody's coming in is, oh, I've got a few apartment that's out, that's empty. It's a 75% loan to value. That rate, and then I have barely any income and barely any liquid funds to support it if something goes wrong. That loan is going to be, the rate's going to be much higher than the previous example. So it is risk-based.
Yep, absolutely. So, and Cindy asking another question is about construction, right? So let me throw in another thing into it. Construction, same thing. Construction is we want to know, what are you building? Are you building a single family home? Are you building a warehouse? Are you building commercials? And after you build it, what are you going to do? What is your exit? How do you get out of it? Are you going to build to rent, or are you going to build to sell? All those things are put into calculation. And another, when you talk about construction, there's another thing is more important, is that what is your experience? Have you done something like this before? Or this is the first time? Now, if this is your first time, how much down payment that you can put down? And now it comes into liquidities, because when you are building a house or when you are doing construction, there's no income coming in from that project. You have to pay back the loan every single month. So the lender would like to know, what kind of liquidity do you have? So on and so forth. So again, all those things will add to what the final rate and term would be. So don't be surprised that the lender come back to give you a rate and you don't like it. It's not because their rate is high, it's what you or your client can qualify for. So the best answer when somebody asks you, what is your rate? Normally the way I would answer is that I have rate anywhere between 3% to 30%. What can you qualify for? learn how to answer the questions with a questions, right? They ask you what is the rate, what can you qualify for? I have all kind of rate. I'm a broker. I work with so many different lenders. I honestly, right now on our shop, right now we have over 500 different lenders that in our pipeline. We have all kind of rate. What can you qualify for? That's the most important, right? So again, Mr. Liang also asked another thing. Can you do a land loan? Hey, that is a very good question. Richard, we were just exactly talking about a deal like this today. So, share with us, what is your take on land?
Um, I think we do land loans. I haven't done one here yet. But I would say the land loan usually they would rather you pay cash because if you're going to build something, they want equity, they want some skin in the project. So depending on where the land is, we're going to have to really take a look at it. So if you're saying, oh, I'm going to buy a piece of land in San Francisco, okay, yeah, maybe we'll consider that. But if we're going to buy a land in I don't know if you're familiar with, huh?
In Wyoming.
Yeah, somewhere in Wyoming, whether we don't know.
Right.
It may be an easy no. So
Yep.
again, it's on a case by case basis. I would not I would not worried about it. I would just say, hey, always give Alan a call, shoot him, and ask him, and then he'll either contact me or somebody else in the network.
Yep.
But if I don't do it, I'm sure somebody else is going to do it
Right.
in the network.
So Daniel, to answer your question, right? So land loan, can we do it? Absolutely, we can do it. And just like Richard said, we need to know what that piece of land is all about. Is it raw land? Or is it a piece of land that is already developed? Is it shovel ready? What is the value? I mean, what is the purpose for that land? So for example, we have a client right here that literally this morning just talked to us saying that, hey, she needs to purchase a piece of land for $4 million and she wants to build a restaurant on top of it. Can we do it? Absolutely, we can do it. Also, we have another client come up to us saying that he wants to purchase a piece of land in Chicago. That piece of land he wants to turn into a RV park. Can we do it? Yes, we can do it. I mean, every real estate deal, there are lender out there that can fund it. The question is that does it make sense? And also, is the client qualified to get a loan? So for land loan, remember the land does not produce any income. So any lender that you talk to, maximum that they're willing to fund is approximately 50% of the value. Okay, 50%. So they are able to put down 50% of it. And on top of it, the lender would like to see your financial, either your business financial or your personal financial, to make sure that you are able to pay for the mortgage every single month for that land loan.
Alan, can I
Yes,
can I
of course.
add in some? So okay, so let's just say that you're planning on doing construction loan. So the easiest way to understand this is that it's going to be an adjustable rate program because it's going to be a short-term program. And it will be your payment is only interest only on what you borrowed and what you use. So let's just say, for example, you're doing $1 million construction loan. You're not going to be charged $1 million on, you're not going to be charged interest on the $1 million. You're going to be doing disbursement based on your project of when you ask for money. So you're going to be only charged on what you used. Okay. Now, one thing that you have to understand too is that they are going to ask you for at least 1 year of interest reserve.
Yep.
So that has to be in the bank. So that's where your liquid accounts is going to, you got to figure out what your borrower's liquidity is. Okay. Now, the way to do construction loan is that we structure it where we give you 18 to 24 months of construction period. Okay. And then we will also give you maybe 6 to 12 months to stabilize the building if you're planning on keeping it. Then we'll negotiate the perm loan. Or if you're planning on selling it, we'll give you 6 to 12 months to get rid of it. Okay. And during that 6 to 12 months, it will be interest only based on whatever's used. So It is not a fully amortized loan, so you don't have to worry about all the money that's coming in, but it will be interest only. Okay, if that makes sense, or if you have any other questions or you want more detail, not detail, but just a summary or maybe even a bullet point on what to look for, ask Alan and I'll be glad to prepare it to send it to everyone.
Yep. Okay, great. Well, it's 9 o'clock. Thank you so much, Richard, for all this insight from the bank's perspective and share with us what you can do. So again, ladies and gentlemen, this is what the Sequoia platform is all about, and I wish everybody can really utilize this platform. There's a lot of things that we can do. Now, trainings like this no mean to turn you into expert on underwriting. We don't want you to underwrite alone. We do not want you to process alone even. So what we want you to do is to tap into your network, let your network of people to know that, hey, we can fund a lot of different type of fundings. Talk to your realtors, talk to your communities, talk to your chamber of commerce to let them know that you can help small businesses to get the funding that they need, whether it's a construction loan or purchasing investment property or working capital, equipment loan, whatever that might be. It's all on this Sequoia platform. Okay, guys. So again, pay attention to, feel free to join us. So we have training like this every Wednesday night. On every Thursday night, we have the Chinese training in Chinese, and we also have in English training. Every Friday night, we have the Q&A session. And every Monday night, we have the opportunity call. So feel free to bring up anybody that would like to join our platform or wants to find out what we do every Monday night. So our VP Bobby is going to be hosting that meeting, and every Tuesday night it's Latino training. So again, we have training every single night. So again, we welcome everybody. If you have any questions, feel free to contact us. And until then, we see you next week. So thank you, everybody. Good night.
Thank you. Bye bye.